Patrick Ceresna of BigPicture Trading is my guest now here at the Vancouver Resource Investment Conference. Patrick, good to be back with you.
Thank you.
Yeah, I'm happy to get your thoughts on gold, on the sector, whether you feel enthusiasm is finally back.
Well, I'm actually far more optimistic about gold than some of the other speakers here at the VRIC.
Wow.
Well,
I already think they're optimistic.
Well, you know what, I was listening earlier to Brent Johnson and a few of the other ones that even Marin was suggesting that gold could potentially go back to 1,000 at some point before the big bull market begins. I actually am of the opinion that gold would have already have gone to 1,000 if it was destined to go there. And so while I feel that the entire last few years has been one bigger bottoming formation, a step where gold is establishing its lows. On the very short term, though, I think for the first quarter of the year that the gold highs are in. So where I'm looking for a pullback, probably we're looking for about 1250, 1240 for a pullback on bullion, but we think that going into the second, third quarters that we would be buyers on dip. So we're basically, the short-term highs are in, but we're buying any short-term weakness.
But you say you're more enthusiastic than others, so what's your projection longer term?
I feel that the US dollar bull market that's been well underway still has more to go. But eventually when the Fed and the central banks stop their rate hike cycle and begin to ease, I think the trend in the dollar could actually start to reverse and we'd see the dollar start to correct. If that scenario was to emerge, then I think that that's the real line in the sand where gold can actually really start getting bullish. I don't think a bull market has really begun. Once we start getting above 1,400 on the upside, that's really where the price trend will really start to establish itself.
So what course do you feel the Fed will take?
I feel they're done. There's not going to be any more rate hikes. They've put out a dot path, but what we've already seen in the euro-dollar futures markets is that they're not only pricing in any more rate hikes, they've already priced in one rate cut by 2020. And so the markets are calling the Fed's bluff, and I believe the market's over the Fed. And so in my mind, we've already entered some form of a bear market, and we're going to most likely see, even though I'm not super bearish on stocks right now, I still think that the Fed is going to have to start to back away from its tightening policy and at least pause. I don't know if I want to already say they're going to start cutting, but I think the tightening is pretty much over.
So what are your sentiments on the U.S. equities front?
Well, the Christmas massacre was a huge overshoot. What my whole theme for the first quarter is that the stock market's got a backfill, having gone too far low. And so while I believe it's a bear market, and I believe that the stocks are likely to remain structurally very weak throughout the year, I feel that over the course of the remainder of the first quarter, though, through February into March, stocks are actually more likely going to be fine, if not even going higher. But I still think that later this year there's going to be a very ugly moment where...
Massive correction?
Where the bear market will continue. But it's just not going to happen anytime soon, in terms of a couple of months anyway.
Patrick, always a pleasure speaking with you. Thank you so much for stopping by. We'll have more coverage for you on Kitco.com.